Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Hello and welcome to Qualcomm Pulse. I'm here to break down what's happening with the stock of one of the chip makers that's been making headlines lately. Qualcomm has had a pretty rough month, with its shares returning just minus 1.5% compared to the S&P 500 Composites plus 5.2% gain. But despite this dip, the ZAX electronics semiconductors industry as a whole has been on a roll, gaining 13.6% over the past month. So what can we expect from Qualcomm in the near term? At Zacks Investment Research, we always focus on one key factor that drives a company's stock price: earnings projections. We believe that a stock's fair value is determined by the present value of its future stream of earnings. And that means looking at how sell-side analysts covering the stock are revising their earnings estimates to take into account any recent business trends. For Qualcomm, this means looking at the latest consensus estimate for the current quarter, which has changed plus 4% over the past 30 days. The company is expected to post earnings of $2.69 per share, representing a year-over-year change of plus 15.5%. But let's not get too excited just yet. That's still down from the Zacks S&P 500 Composites gain. Looking at the bigger picture, Qualcomm's consensus earnings estimate for the current fiscal year is $11.81, which points to a change of plus 15.6% from the prior year. However, over the past month, this estimate has changed minus 0.1%, and the next fiscal year's estimate of $12.19 indicates a change of just plus 3.2%. So while earnings growth is still looking good, it seems like analysts are getting a bit more cautious about Qualcomm's prospects. But what really matters here is Qualcomm's track record on revenue growth. The company has consistently beat consensus estimates in each of the trailing 4 quarters, and its reported revenues have been surging as well, $10.84 billion in the last reported quarter, representing a year-over-year change of plus 15.4%. And with a surprise of plus 155% for that period, it's clear that Qualcomm is still bringing the heat. So what does this all mean for Qualcomm's stock? At Zacks Investment Research, we use our proprietary stock rating tool to give you a more conclusive picture of a stock's price direction in the near term. And right now, Qualcomm's Zacks Rank 3 Hold suggests that it may perform in line with the broader market over the next 30 days. But before making any investment decisions, let's take a step back and look at the bigger picture. How does Qualcomm compare to its peers on valuation metrics like price to earnings, price to sales, and price to cash flow? And what does that tell us about whether the stock is overvalued, rightly valued, or undervalued? That's where our Zacks style scores system comes in. With a score of B, Qualcomm is trading at a discount to its peers. But remember, this is just one piece of the puzzle. In conclusion, while market buzz around Qualcomm might be worth paying attention to, its Zacks Rank 3 does suggest that it may perform in line with the broader market over the next 30 days.